Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 12th, 2010. Well, folks, the market is lower today, but not by much. We're just hovering down about 83 cents on the SPY, well off the lows of the day. You can see this morning we gapped sizably lower, but then really rallied as soon as we dropped. The market started to rally higher, and within about two candles, you recaptured the major support at 108.30, and that's a very key level because look at what happens. After this second candle of the day recaptures, you consolidate, pop, pull back into it, pop again, and really have never gone below that level. You're now hovering right on top of it as we speak. Now, overall, what we want to talk about here today is what caused the gap down and whether or not it means the markets have reversed off the lows. Does it mean something like we're going to go up or we're going to go back down? And ultimately, what you have to note here is the massive selling yesterday made people very worried. In addition, after hours yesterday, Cisco Systems, CSCO, reported earnings, and they were not good at all. It wasn't the earnings were not bad, actually. What it was the outlook, and the outlook was very, very weirdly cautious. They basically came out with some very, very bearish comments that really freaked the owners of this stock out and overall the market. And what we saw after hours yesterday, the futures were selling. We came into this morning's session. The jobless claims came in 2,000 worse than last week, which is, again, getting closer and closer to that 500,000 level on initial claims. And remember, that number solidifies how many people are filing for unemployment. So it gives you a good weekly basis for understanding what the jobs report could be when we get to the next jobs report at the beginning of September. But either way, folks, again, between Cisco and those jobless claims, the market was pretty freaked out after yesterday, and we had a nice solid gap down. But you have to remember that when everyone freaks out, you're usually going to get a little bit of a reversal. Why is that? Well, remember, when every amateur, and remember, we always talk about amateurs here and the retail investor, because they're the ones that are always going to be wrong in the market. All right, when they start to get scared, when the market starts to gap down and they're all dumping in panic, that's when you're going to see a reversal. And in my opinion, that's what we saw this morning. The market again gapped lower sizably off of yesterday's big loss. And if you just use your rationale and your logic, you have to say to yourself, all right, yesterday we had a huge down day. Today we had a big, big gap down. Chances are off of that gap down, the markets were short-term oversold, and sure enough, they started to rally. Now, they're not turning to the positive side as of now. In fact, we're still down about 85 cents on the SPY. But again, notice how the gap down here, which took us all the way to 107.60, started to race higher. And within about two candles, we recaptured this white trend line. You consolidated, pushed up, consolidated, and again, have just stayed in a very tight range. Volume has died out unbelievably here. This morning, we had a good amount of volume on the first two candles, and then since then, it's just got lighter and lighter. Why? Because, again, August in the summer months, the market had a crazy day yesterday. A lot of people are taking a little bit of a breather. Now, the spiders are coming down to this white trend line. Could this white trend line break? Absolutely it could, folks. Why is that? Well, we got above it and confirmed above it, and you retraced into it once, and then here twice. Each time it hits this white trend line, it's getting weaker and weaker. So, again, eventually, if you continue to hammer on this, you could break to the downside. Do I think there's going to be a lot of downside in the afternoon session? I don't think a ton. Mostly because, again, the volume is so light. Generally, volume being light dictates a neutral bias on the markets, and I think that's generally what we'll look for into the afternoon session. But I do think towards the close, you'll get a little bit of gyration. I think as you get more volume just before the close, everyone starts positioning themselves. You'll get a little bit of a move. The question is it going to be up or down, and that's what you're going to watch for. All right, now there's been some key technical levels hit, and I gave out these levels, and in fact, we made a good profit. For those of you in the Research Center, congratulations on Chevron. Chevron, we entered two positions short, a half position and a half position. The overall average of those over the last week or so was $78.57. So at $78.57, which really is up in this range up here, we were short Chevron. This morning on the gap down at $76.40 for over $2 in profit, we covered half of that short. So right down here at $76.40 after shorting all the way up in this range, covering. And again, why do we know that this was a good shorting opportunity on Chevron? Well, if you take a look at your daily chart, you can clearly see it was extended. Look at that move up. Extended, not only that, but the in-the-money stocks turn date was nailed. August 10th, folks, was given out as a specific day when we thought the turn date would arrive and it would start a chain of events that would knock us down. And not only did that level, that day hit and we have a negative day, but after that we literally the next day, which was yesterday, dropped 250 plus points on the Dow. Unbelievable drop. And again, here we are. looking to profit off of it, and we are profiting off of it. So again, if you're in the research center, you should have made plenty of money on that trade. I have my second half I'm still going to hold on Chevron, looking for a little bit lower of a move, maybe over the next week or so. And again, bottom line is, good profits there, break-even stop on the second half, and in the money sizably so far, almost $2 in the money on that remaining half, and again, we'll continue to look for more gains. Now, why did I cover half of my Chevron trade? Why did I move out half? Part of it is you have to be smart about trading. You want to make sure you take a little off the table, put some profits in your pocket. That's what I did. It was a full position, so that's 10% of my swing trade portfolio in Chevron. I took off 5% of that amount, so half of that amount. And again, let's take a look here. I want to show you right here. This is why I moved out half and covered, because you had gap fill. Gap fill is a technically key level for support. Not only that, but below you have a necktie. Necktie is a cross of two moving averages at the point of contact. And right here, you knew there was going to be a ton of support. So it was the smart move to take off a half position. Sure enough, since then, Chevron has moved off those lows, and we basically got near the lows of the day when we exited or covered our Chevron short position. All right, some other trades that are of interest to me. Let's take a look. What else do we have? Apple Computer. Apple gapped down and has moved off the lows up to 88 cents on the day. So that's showing some good strength considering the weak market today. And again, overall, the market is not down a huge amount, but it is down on the day, no doubt about it. We're down 70 points on the Dow, NASDAQ down 22, and S&P down about 8. So about 0.75% to the drop side. Granted, it's not 2.5 to 3% like yesterday, but it's still a little bit of downside. And again, we are still off the lows of the day. Let's take a look at a couple other stocks. CREE. I thought CREE was fascinating today. A lot of people talked about this in the chat room today. We've talked about this as being a great level to buy off of. You can see the little double bottom right here. The stock hits it and then bounces off of it. Little bit of a 1 day or 2 day swing trade probably, again, for a little bit of a bounce on CREE. Beautiful chart right there. Eventually, it probably breaks through this line, but in the short term, the first hit of any major trend line, double bottom, you're going to be looking to buy. Now, gold today. Gold is having a big update, folks. The GLD is up $1.46. You can see it's after a little consolidation. We talked about this yesterday. Little bullish consolidation, little gap up above the 50 moving average, and that is a bullish move today on gold. Why? Because, again, from what the Fed said yesterday and the day before, I should say, really people are now saying that the economy is definitely slowing, possible double dip recession, although in my opinion we never got out of the recession to begin with, so it's hard to have a double dip. But bottom line is they pumped enough stimulus money in to give us a little bit of an adrenaline rush before we just fell back to sleep, essentially. All right, so that's what's going on there. The USO, beautiful little down move on the USO. The USO is actually into a little bit of good support here. Take a look at this. You have all the pivot lows right here. You actually have a good little level right here. If this breaks, you're going all the way down here. There's going to be a lot of nice little levels to discuss here on the nightly video in the Research Center in regards to oil. And again, we'll continue to follow them and give you guys all the latest information. The dollar today, folks, if I told you the markets were down, what would you say about the dollar? You would say the dollar was up again. That is correct. Anytime the dollar is down, chances are the markets are up and vice versa. When the dollar's up, the markets should be down. There's an inverse relationship there. Going back to the SPY, let's focus in on the intraday again. You can see you're still holding that white trend line. You've still traded in a very tight range lately, and we'll continue to watch how things play out. All right, folks, have a wonderful rest of the day. Come join the Research Center. You want to get in on these next few trades that we'll do. Again, profitable trades at inthemoneystocks.com in the Research Center and, of course, in the intraday stock chat. Take care.